JFD, just fair and direct.
Okay, hello and good morning everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today's the 4th of June 2021. So yep, welcome everyone. Welcome to this Friday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff guys. But before we do that, as always, let's quickly have a read through our risk disclaimer. So the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, I'll give you a few seconds to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, as always, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, and specifically our JFD research page, which we also update on a daily basis. So yep, check us out here on jfdbank.com and click on the research tab right there on the top, guys. So now then, jumping into the charts, the first one I want to pick up here is Nikkei 225, just a quick update. Basically, the index remained above this upside line, this short-term upside support line I talked about previously, the one that's drawn from the low, the 13th of May. But it kind of was stuck still below this downside line. So probably what's more interesting here is that now previously I talked about this upside line, but to be honest, given that this kind of current picture, we can actually get rid of this upside line, because we're still focusing on some of these levels, not really mainly on the upside line. We're focusing on for example, if you want to go for the upside here, we need to wait for a break of this downside line and then a push above the 29,519 territory. For the downside, we need to see a drop below this upside line, and then maybe also somewhere a drop below this 28,710 territory. At the same time, we would see the index falling below the 21-day EMA, and then yes, further declines could be possible. But at the moment, we're kind of coiling up, we're getting squeezed, so let's see which way this is going to break out to. I can see in the chat room, Erica, hello, good morning to you too. I hope you're having a fantastic start of Friday. I mean, we're getting closer to the weekend, so yeah, hopefully this day is gonna be well. So coming back to the charts, guys. So the second one I wanted to pick up here is, of course, Shanghai Composite. Beautiful rebound here. So this is what I talked about and mentioned in the beginning of this week, basically, and kind of throughout this week, that we might see a bit of a drop lower here, especially if it drops below this 3,577 territory, somewhere around here. If we do see a move below it, then yes, our next target will only be the upside support line, because I want to see if it's actually going to rebound from it or not. And to be honest, I mean, yeah, we kind of had a very nice technical move here to the downside, then a test of, well, almost a test of this upside line, or we can say actually a test of the area, and then a rebound and a push back above this 3,577 territory. So of course all this paints a bit of a slightly more positive picture, but still I would prefer to wait for a push above that 36.26 territory right here in order to get a little bit more excited with the upside. So keep that in mind. For now, like I said, we will continue we'll continue aiming slightly to the upside, but to be a little bit more on the safe side, a push above this barrier would be needed, guys, because again, if it travels higher but fails to move above this hurdle, then well, maybe we'll end up breaking this upside line. But again, confirmation breaks are needed still, so let's wait and see. Now the German index, DAX, and we had a very nice recovery yesterday at the end of the day, and you can see that initially we were falling lower, but this is where This is where it's useful to wait for those daily candles, guys. I mean, yesterday I said that if it stays below, because when I was covering DAX, I mean, I said that if it stays below this hurdle, because at that point we were already below it, if it stays below it, then yes, lower levels could be met, but it didn't stay, and instead we're now coming back to the idea kind of mentioned in the kind of a day before that. So the idea was that that if we remain above this 15,569 territory, if we stay above it, then well, I mean, there is still a good chance for this one to drift higher. So in a way, this sorry about that, guys. So yeah, in a way, this this kind of hurdle is still providing that support that we were that I was talking about. So long story short, if you want to go for the upside, well, I mean, at this point in time, probably I would say that again, if we stay above this hurdle, then yes, we can continue aiming slightly higher. To be a little bit more on the safe side, of course, what you can do is wait for maybe a push above this barrier right here. Let me just kind of enlarge this a little bit. There we go. So as you can see, the high of the 2nd of June, that was near the 15,631 territory, and yesterday we just closed fractionally above that. So if we take a look at the cash index right now, we'll see that the price is currently sitting just bang on at that level. So in a way, there is still a lot of there are still a lot of indications that that this could continue pushing further north, guys. Now, don't get me wrong. I think that some of you probably think that that we are quite overstretched, we are quite overbought, but again, we could have been saying this already like a couple of months ago, but it just continues to rally. So that's why be very careful with all this, especially with those shorts. As I said, for now, I would say that I would wait for the daily candle to kind of, I want to see where this daily candle is going to end today. If it pushes higher, okay, that's great, more buying interest kind of will be coming in. However, if it suddenly once again falls below the 15,569 territory right here, then yes, we could consider maybe a bit of a corrective move here to the downside. So yeah, keep that in mind. Basically, I need to see a daily candle staying below this area. Now DXY, so beautiful move here to the upside. So this worked out nicely. So I talked about this, if you remember. I was talking about this throughout this whole week, and basically what I was saying that in order for me to go for some higher levels, well, a push above this 90.23 territory would be needed, guys. And as you can see, now we're climbing further north. My next target is the 90.87 territory. However, this is where the kind of the but comes in, and basically, of course, as you know, today we have the kind of the special day with a lot of well, some data, some important data coming out. So some investors will be keeping an eye on the U.S. unemployment rates, the non-farm payrolls. Of course, it will be interesting to see what number comes out. Of course, the current expectation is for a higher number than the previous one, and the only thing is, and of course, there's a lot of positivity saying that, you know, that they're as some Fed officials stated that there are issues in the labor market in terms of finding labor force, and some employers are struggling to find good skilled workers. However, I would say that yes, that might affect the NFP because it's a non-farm payroll. Then, but in the situation in the farms in the U.S., this is something that's a little bit on the cautious side, I would say. So you can also, by the way, you can have a read through all this later today, maybe in around an hour and a half. We'll release our daily market review on our website, so check us out then, and you can have a kind of a more detailed read in there. So So that's why, I mean, it will be very interesting to see today's NFPs, how all this is going to play out, and well, we could see the dollar reacting to that as well. But at the moment, from the technical side, everything's looking quite positive for the for DXY here, and especially if we continue to trade above that 90.23 zone. If we do that, then yes, my next target is the 90.87 territory. So keep that in mind. Now, jumping into gold, and also, of course, gold doesn't like the stronger dollar, and we can see why. But the other, I mean, thing here that I've talked about from the beginning of this week, guys, that if we fall below the 1890 territory, then yes, this could open the door towards the 1875 initially level, then the 21-day EMA, and then maybe towards this upside line. To be honest, almost everything worked out, just apart from the kind of slight more accurate touch of this upside line. But to be honest, we'll take that. That's a good, decent result. So this kind of worked out nicely. Now the big question here is, can we see a rebound? And for me, to be honest, in order to consider the upside again, maybe I would actually prefer to wait for a push back above the 1890 territory. For the downside, I would like to see maybe a drop somewhere below this little hurdle, the 1852, marked by the low of the 19th of May. At the same time, we would get a break of this upside line drawn from the low of the, let me just quickly double check that, from the low of the 31st of March. And then, yes, we could take it from there, guys. So, for now, long story short, we are keeping an eye on some of these levels. But, in a way, the idea that I talked about from the beginning of this week worked out nicely. WTI oil. So, we are still above this highest point of March, which was the previous highest point of this year. And that area is approximately around that 68 territory. Now, my next target here is, of course, the 70.5455 zone, the one that I mentioned previously, and that level is, I kept talking about it throughout this whole week, but I keep forgetting that's the low of the 11th of October of 2018. There we go. So that's going to be my next target, as long as we stay above this 68 territory. If we start falling below it, yes, I'll take a bit of a neutral stand here, but if it falls somewhere below the 66.3840 zone, now this is where it could become a little bit more interesting for the sellers, so keep that in mind. Bitcoin Cash, very quickly on this one. So yesterday we had a nice push higher, but yeah, the dollar index also kind of weighed in here a little bit on the cryptos. But there we go. During the week, during this week, I said that this is what I'm keeping an eye on for now. I'm keeping an eye on this little triangle pattern. Of course, it looks like more of a symmetrical triangle. So basically, the breakout could be either way. However, the prevailing trend before entering the triangle pattern kind of it was to the downside. So in a way, according to some TA rules, this kind of could break out to the downside and could follow it. This could be a continuation move to the continuation move lower. But again, before we could assume that. Actually, well, before we actually not assume that, but before we could let's say accept that as a fact, we would actually need to see a break of this lower side of the triangle, also a drop below the 200-day EMA, and for me personally, I would like to wait maybe for a drop below the 618 territory, marked by near the lows of the 30th and the 29th of May, and then go for the downside. Because at this point, I mean, we could see maybe a hold up somewhere around here, we can then rebound. So that's why let's avoid all these issues here, and let's see if we can actually break this hurdle right here. XRP USD, so Ripple, again, this area, this 1.0606 level, I talked about this throughout this whole week, and I said that we need to see the daily candle remaining above that area in order to go for some higher levels. But as you can see, we didn't get that, and well, instead we're having this nice decline right now. So again, everything's kind of working out nicely here for the sellers. It seems like that. Now, some of you might say that maybe we're in this little range here, but to be honest, we have a bit of an ascending triangle here, so that means that if you want to consider maybe a move lower here, then well, as you can see, I have this arrow here from this level. That's my kind of safe point here, the 0.7910. But of course, you can start looking at the downside if we break this upside line taken from the low the 23rd of May, and if we do that, if we break that, then certainly then we could maybe consider a further move lower, but at the moment, again, it's a bit of a tricky situation here. That's why I will probably stay neutral on this one, but I'll keep an eye on very closely keep an eye on this this upside line and this barrier, the 1.0606 area. Now, jumping into a few pairs, AUD and ZD. So the idea is still kind of working out. So throughout this whole week, I was talking about AUD and ZD, and I was saying that basically my my target initially was that 50% retracement on the Fibonacci. We managed to push further north. We even actually tested the 61.8% retracement on the Fibonacci, but as you can see, we're currently struggling to push above the 200-day EMA. So at the moment, I will be very, very careful. I'm still, oops, just bear with me one moment. At the moment, I'm still kind of keeping an eye on this scenario. As I said before, that if we continue to struggle to overcome, let's say, all this area around this hurdle right here, the 1.0711, or near this 61.8 territory, or this even better, the 200-day EMA, then yes, another slide could be possible. So let's see how this is going to play out today. But basically, if you want to be a little bit more on the safe side here, if it falls back below the 50% retracement on the Fibonacci, which is roughly around the 1.0695 territory here, then yes, we could maybe consider a bit of a decline. So again, keep that in mind. Let's see how this is going to play out. NZD-USD. So NZD-USD dropped below this upside line, so everything kind of worked out nicely here for the sellers, and also we dropped below this 0.7151 territory. I spoke about this level this week, and this kind of opened the door, potentially opened the door towards lower levels. Now, for now, I'm going to remain bearish, to be honest, and I'm going to aim for slightly lower levels, and my next target will be this 200-day EMA. Unless the pair starts climbing back above this upside line, then I'll take a neutral stand, and for me to get comfortable with the upside, I need to see a push above this barrier right here, and then we'll take it from there. And that barrier is around the 0.7305. USD CAD, so beautiful move here through this downside line, broke it, and now we're currently testing this this 21-day EMA. Now, in order to go for the upside, we would like to see a push above this barrier right here, the high of the 27th of May, near the 1.2142 territory. If we do that, then yes, higher levels could be met, and we could continue climbing higher. We could even maybe aim for that 100-day EMA. But again, guys, at the moment, today's a special day in terms of economic data. And especially US and Canada's data, because we have the US employment numbers and the Canadian employment numbers coming out. So let's see, this might become a little bit volatile, so that's why I would say that be very careful. We might see a few swings here and there. That's why probably don't try to take a position before the kind of the new before the data release. Because we might see a few ups and downs here, and yeah, I mean, unless you have of course a huge stop loss, and you're willing to let's say, you can allow yourself to lose some money, but that's why we rather stay on the safe side, guys, and wait for the news release and then kind of do something about it. Jumping into USD CHF, also looking quite positive. Of course, the dollar index is helping here a lot, and yep, we have pushed above this 0.9030 territory. I spoke about this level this whole week. I was talking about this level this whole week, and well, as you can see why. And yesterday we closed above it. We ended the candle above it, and yep, we're now seeing a further push north. We're currently testing that 0.9048 territory again. So let's see if we can actually climb all the way here, and this is where I'm gonna drag my arrow a little bit lower. And this is where I'm going to aim only for this 0.9094 level marked by the high of the 13th of May. Because around here we could also test the 100-day EMA, and then we'll take it from there. GBP NZD, so beautiful move here towards this downside line. The downside line provided good resistance. So basically, the moment I would say that yeah, everything's kind of working out nicely here. We are getting a hold up, so the kind of mission complete, I would say. But now the big question here is, can we see a further push north? I mean, it seems that we could be coiling up here a little bit. So I wouldn't be surprised, for example, if we would now drop lower and break this upside line and move towards this other upside line taken from the low, the 7th of January. So I'm not saying that this is exactly what's going to happen, but if this downside line here taken from the high of the 29th of March continues to provide resistance, well, a bit of a move lower here could be possible. But of course, to consider that or to consider that scenario, I would prefer to wait for a break below the upside line and below the 1.9609 territory right here. That level, the previous one that we considered as a good resistance area, but now it could take the role as a strong support, which if broken could open the door to slightly lower areas. GBP JPY, haven't looked at this one for quite a while, but last time when I talked about it, I said that we are still trading above this upside line taken from the low of the 23rd of April, and yep, we are still below this barrier right here, the 156.09 territory. So in order to go for the upside, we need to see a push above that area. If we're not really going to get that, then, well, I mean, we'll continue monitoring this upside line. If that gets broken and we see the rate falling somewhere below this 154.84 territory right here, then yes, lower levels could be met. But at the moment, basically, guys, long story short, we need that. If we want to go for some higher areas, well, we need that pop above this barrier right here, the 156.09 level. So let me just drag this one a little bit like this. Euro GBP, so we are drifting to the downside again. Once again, the 0.8582 territory is on the spotlight, and yeah, let's see if we can actually stay and if we can keep the daily candle below it. And if it does that, then yes, we will consider a further move south. But if it cannot do that, then, well, I mean, we will just have to go aim for some higher levels. But this is where the tricky bit here, I mean, we could be forming here a possible descending triangle. It could be, but again, until we see that drop here below this hurdle, then, well, I mean, we can't really get comfortable with further declines. But for the upside, I would say that if we climb back above the 21-day EMA shown here as the yellow line and push through this downside line, then yes, maybe higher levels could be met, and we might not even need to wait for a break of this barrier. Instead, we could actually aim for this barrier, the 0.8672, and then we could take it from there, of course. And finally, EURUSD. So the EURUSD bulls, of course, are not really liking the situation here. And to be honest, for me, I mean, it's kind of where everything's working out according to the plan. So yeah, I would say that if we remain below this area, and actually from the beginning of this week I said to you guys that we will kind of aim for lower levels if we kind of drop and stay below this 1.2161 territory, below the 21-day EMA, of course, as well. And yeah, so far, I mean, everything's working out nicely. So can't kind of really complain here, but now the big question here is, can we actually drift further south towards this 1.2051 territory? Of course, a lot will depend from the NFPs. Keep those in mind. We might not even, let's say, travel all the way straight away to this 1.2051 territory. We might retrace back up. I mean, maybe we could shoot higher. But if at the end of the day, if the daily candle still remains below this hurdle, below the 1.2161 and this 21-day EMA, now this is where it could become very interesting for more sellers, guys. For the upside, pretty straightforward, pretty conservative, to be honest. I mean, I'm going to wait for a pop above the 1.2250, 455 territory right here, and then aim for some higher levels. By the way, I just noticed the comment and the chat room here, in the Facebook chat room. So yep, I hope Alseni, I hope you're enjoying these videos as well. So thank you very much for the comment. So yeah, guys, that's it kind of for this session. I hope you kind of found it useful. Once again, I will repeat myself. Be very careful today, as always. Be very careful today. Have your stop loss in place. The suggestion, of course, is to wait for the numbers to come out and then do something about it. But of course, you know yourselves better, guys. If you do act before, then definitely have your stop loss in place and always only risk something that you are willing to, you can afford to lose. Not willing, but you can afford to lose. There we go. So guys, thank you very much, and I'll see you later at my Traders Tea Time today, 12:30 GMT. So thank you very much, and bye-bye.